The $12 billion economic defense move that just happened on February 3rd, 2026, the administration officially launched Project Vault, $12 billion Australian dollars, strategic minerals stockpile combining $10 billion Australian dollars, exporting port bank, loan with $1.67 billion in private capital. This isn't stimulus. This is supply chain insurance. The reserve will stock critical minerals, including rare earths, gallium, cobalt, lithium, and copper materials needed to manufacture everything from smartphones to F-35 fighter jets. General Motors, Boeing, GE Vernova, and Western Digital have already signed on as partners. Here's why this matters. Every F-35 requires 900 pounds of rare earth materials. Every Virginia-class submarine needs 4 metric tons. Yet China controls approximately 70% of global rare earth mining and 90% of global processing capacity. When trade tensions escalated in 2025, China restricted rare earth exports, forcing American manufacturers into crisis mode. Project Vault creates guaranteed demand for domestic suppliers, attracting billions in new capital investment to American mining companies. The government can now act as buyer, market stabilizer, and strategic counterparty. This mirrors the Strategic Petroleum Reserve created in 1975. But for the minerals that power modern technology and national defense, it's not about rocks. It's about not needing Beijing's permission to build critical infrastructure. China's strategic chokehold on silver and rare earths. January 1st, 2026 marked a major shift. China placed silver on its restricted export control list alongside rare earth elements. This is economic leverage without firing a shot. As silver isn't decorative, it's essential for solar panels, satellites, radar systems, and every advanced electronic device manufactured today. China controls 60 to 70% of refined silver supply through 27 accredited refineries, compared to Japan's 13 total refineries. The new restrictions require exporters to have minimum annual production capacity of 80 metric tons and credit lines exceeding $30 million, effectively shutting out hundreds of smaller suppliers depend on. China exported 4,600 metric tons of silver in the first 11 months of 2025 alone. They're deploying the same strategy used with rare earths in 2010. No outright ban. It's licensing requirements and approval processes that create choke points. When China applied this to rare earths previously, prices spiked 4,500%. Manufacturers couldn't produce smartphones or missiles without Chinese approval. China also restricted tungsten, an antimony critical for aerospace and semiconductors. Tungsten exports dropped 13.75% between January and September 2025, with over 80%. Control of global tungsten production. China holds strategic leverage disguised as environmental regulation. Historic metals crescendo what it actually means. Gold reached $5,048 per ounce on February 4, 2026, up over $2,180 from last year. Silver hit $90.54 per ounce, the same day a gain exceeding $58 in 12 months, representing roughly 180% growth. Then came the crash. Silver plunged as much as 40% over recent days, triggering exchange lower circuit limits that halted trading. When holding a position suddenly requires more capital, traders liquidate. Over-leveraged speculators got shaken out instantly, but the fundamental drivers haven't changed. Gold remains protection against currency debasement. U.S. national debt sits at $38 trillion, and the dollar index fell 9.5% in 2025, its worst year since 2017. Silver's industrial demand is non-negotiable electronics. Solar panels and satellites cannot be manufactured without it. Goldman Sachs projects gold reaching $5,400 per ounce by year-end 2026, while Bank of America targets $6,000. The sell-off eliminated weak hands and excessive leverage. For those who understand the underlying dynamics, this represents a buying opportunity while headlines create panic. Where smart money actually moved infrastructure over chips, the narrative shifted. NVIDIA isn't where capital is flowing. The new winners are companies powering AI infrastructure, not manufacturing AI chips. GE Vernova surged 112% over the past year, hitting an all-time high of $752.02 on January 30th, 2026. Current price hovers around $758 with a $210 billion market cap. Why the massive gains? Because AI requires electricity, not just semiconductors. Vernova provides gas turbines, nuclear power services, and grid modernization technology. Their power and electrification segments posted double-digit organic revenue growth driven by data center and cloud computing expansion. They're sitting on a $135 billion order backlog. Bloom Energy follows similar trajectory, providing on-site power generation for data centers and AI facilities. When traditional power grids fail, Bloom systems continue operating. These aren't speculative tech plays. Advanced technology and modern warfare demand logistics and reliable power, not just headlines. USA rare earth stock jumped to $25.97 on February 3rd after securing $1.6 billion in proposed federal support. Critical Metals Corporation rose 10% following the Project Vault announcement. This is where institutional capital flows when governments guarantee demand through strategic reserves. The picks and shovels of the AI revolution outperform the miners themselves. The bigger war dollar versus yuan for reserve currency status. China openly advocates for the yuan to replace the dollar as the world's reserve currency. This is on speculation. It's stated policy. They're backing this with coordinated action, expanding trade settlements in yuan, forging bilateral currency agreements, accumulating gold reserves, and maintaining dominance over rare earth processing. Reserve currencies aren't granted, they're challenged through decades of strategic positioning. America currently faces converging threats: $38 trillion in national debt, declining dollar strength measured by a 9.5% drop in 2025, and critical dependence on Chinese-controlled supply chains. Between early 2025 and early 2026, gold prices nearly doubled, and silver rose fourfold. Analysts attribute this to a broader crisis of confidence in fiat currency systems following years of high inflation. As Diego Franzen from Plenus for Investments noted, gold remains unique as an asset. Without counterparty risk, it makes no promises, pays no interest, and depends on no institution's decisions. It simply exists. The current market volatility is uncollapsed. The friction cost of a power transition between the world's S to largest economies. Gold, silver, and rare earths transformed from commodities into weapons. Energy infrastructure became the economic bottleneck. Waiting for absolute clarity means missing the repositioning. The critical question: can you distinguish signal from noise and track where capital actually flows?